In a way, that's an amazing development because also we take into consideration that your own background has been in corporate and investment banking, and here you are trying to build a retail house. Give us a sense of what you've been learning and what have you achieved to build the organic, sustainable, long-term business of this bank, and resisting the temptation of doing proprietary trading and so on.
Yeah, indeed, it's a little bit difficult given my background, but every situation is different, and every bank has a different story. And I think that in the case of Gulf Bank, you really need to look at what is it that made us historically different. What is it that made customers want to bank with us? Actually, it seems that maybe on some of the products, they didn't. I mean, that's not why they were banking with us. And in fact, Gulf Bank had actually a very good time from 2000 to 2005. That is when they created themselves as a truly, a retail and commercial bank.
So the retail bank
was created. No, it was
the
created
DNA
before.
Existed
No, yeah, but this is the core DNA of Gulf Bank. What happened is, and that's from 2000 to about 2005 and 2006. And very frankly, my predecessor did a superb job then, on the pure commercial and retail aspect. But what happened is that then we took it for granted. And then we started focusing on those things that we thought would take us to the next stage. And we thought we could be a Goldman Sachs. And we thought we could be, many other things as well. And I don't think it was within our DNA. I don't think we had the controls in place. I don't think we had the people in place in order to do that sort of business. So in the 2-year plan, the view was that no, we should concentrate on what we do well, what gets the client back to us. Now, very frankly, if I have to take a very long-term view, and we will, maybe the view will change slightly. It will never change in terms of, if you want, selling product that, in my view, are inappropriate, product that expose clients to risk. We will never do that, or do some pure proprietary trading or direct investment. In my view, never, under this management team. But there are certain things that we may wish to consider. So, for instance, if you think of the corporate finance and advisory type of investment banking,
it's fee-based.
Yeah, fee-based. That we might do because it doesn't expose, let's say, the client to much risk. That I'd be interested in doing. For example, distributing certain funds that are low beta, very low volatility, low risk to our client. Distributing funds that we do not manufacture. Yes, why not? So there are certain things that we will do and that we will do more over time as we, especially when the 2 years are over, as we have come out of this crisis, then we'll have to look at further ways to expand. And yes, some products will be attractive. Now the corporate investment banking background for me, I think, was of course very critical. But I must say that. When I was covering the Middle East and North Africa in Citi, I was covering as well all businesses, so the corporate investment bank as well as the consumer bank within Citi. And frankly, I learned a lot from that period, and that's when I came really to appreciate the power of a consumer bank franchise. Because the beauty of the consumer bank is that, of course, it gives you earning with very little volatility, and it teaches you that you need to manage things in a very standardized way when you want to have a mass appeal. When you manage it on a corporate basis, every deal is tailor-made and so on, and of course that's the way it works. But when you want to manage, so many customers, as far as we're concerned, it is hundreds of or tens of thousands. So you cannot manage it this way. It has to be through standardized products, standardized approach. And this is the discipline that I actually learned in the last few years with Citi.
Is there a temptation to build a wealth management or a private banking type business as well, in addition to the retail banking franchise?
Yes, to a certain extent. But I'll be very cautious here, because everybody says, oh yeah, let's build this. But what is the value proposition? I mean, in other words, if I look at Gulf Bank, we are a local bank. You have a lot of, actually quite a lot of very wealthy Kuwaiti customers. But what is it that they want from you as a local bank? They want, of course, the deposits, the convenience, the service. They would want some maybe local funds, which we are now, offering again as distributors. But I don't think that they want you to offer them international products or access to international markets for a very simple reason, because those wealthy customers have that access directly. If they want an international funds into specific equities and so on, or specific products, they go to UBS, to Credit Suisse, to JP Morgan, to Deutsche, to others who have, I think, very good service at that. So if we think that we can compete with those, I think we're wrong. And many people are, thinking of a wealth management offering whereby, they want to offer a full, a full suite of investment management products. I think that's wrong. I think for us. Because of our local profile, what we will offer is, for example, local funds, low volatility, maybe regional funds, yes, for the region, because that is we're better placed than others. But that would be the extent, I think, of our focus.
And finally, with the governance rules that are being put in place, and with the commitment of the Kuwaiti regulators to Basel III, for example, does that put pressure on your need to be capitalized? And given the organic way in which you want to build your business, is time on your side? Because it's just a matter of time before even a foreign bank with a limited license that is a 100-pound gorilla can override your business very, very easily.
I don't think so. In fact, I think the tables have turned the other way in Kuwait. And it's true in some of the GCC countries as well. The banks are theoretically overcapitalized. You know that the requirement is 12% of capital ratio, and and the average is 18%, and we're at 18% capital ratio. That would be viewed in certain circles, I think in Europe and the US, as being vastly inefficient. But in a way, indirectly, it prepares you for very well for Basel III, because no matter practically no matter how they compute it, and by the way, we have already run simulation. Practically, no matter how you define it, we are either there or practically there. Even if we are the only country to implement Basel III, so I wonder why would we want to be? But if that is what we want, because we want to be the first, fine, be it. The Kuwaiti banks can meet it. Now, certain banks like us meet it because the capital ratio is the real capital ratio. We've taken all of the provisions that are required. My view is that it's probably true of many of the banks, not necessarily all, because if their management hasn't changed, maybe they need a little bit more time to be able to take those actions that would have impacted their capital. But frankly, they have the time, and therefore I believe that the Kuwaiti banking system, even though has been affected by the asset valuations and so on, is in fact in pretty good shape compared to practically any place you would care to compare it to.
Michel Accad, thank you so much for spending time with us.
My pleasure, thank you.